Sandip Sabharwal joins us now and looks like he had a late Sunday night. He's running late. क्या कर रहे थे सर रात को?
Yeah, I had a late night flight.
Okay. Now that you're a late night flight and we are insisting on an early morning start for you, how do you see this week and next couple of weeks moving for the market? Do you think we could hit a pause mode, or we are likely to retreat, or the momentum will continue? Directionally, where do you think August, September and October are headed?
So I think my view is August, September should be fine. I believe global sentiment indicators are still point out towards a fact where we do not see a huge euphoric build-up. So people are still negative, people are still skeptical, there is still disbelief on the rally. And to that extent, that augurs well for the overall market and flows into equities, not only in India, but globally. So, but on the other hand, if you look at it pure fundamentally, the valuations have become a bit extended in the short run. So how will that cumulate in an overall performance? My guess is that August, September should be fine, and time cycle wise, we should get some correction in October, November period. That's what I'm betting on. So going into September, we might be increasing some cash in our portfolios.
Increasing some cash in the portfolio, that's the view coming in as far as the month of August is concerned. But what do you make of this latest move from the shareholders at Siemens, Sandip, and a view on the industrial space?
The Siemens news, unfortunately, I have not tracked, but overall industrial outlook looks positive. The big part we need to understand is there are a lot of new avenues opening up for growth of these companies. So whereas the available space for growth, if it used to be X 5 years back, that itself has become 2X. If you look at the infrastructure segment, purely that segment, there the scope of the projects, the size of the projects, everything has started to go up substantially. So whereas the base case used to be maybe 500,000 crore projects earlier, now companies are winning 5,000, 6,000 crore projects, and that's also reflected in how the order flows of the market leader L&T are building up. So the industrial space as well as the construction space of companies which are not into asset ownership like bot, etc., where I remain a bit skeptical, remains positive.
That's a view coming in on Siemens. Quickly, Naresh, your view on a couple of these power stocks. NTPC and Power Grid both were seeing quite a bit of breakout on Friday. Post that, NTPC's numbers have been quite okay. Power Grid, of course, reports numbers today, but what does the chart check suggest?
So technically, the whole sector looks interesting. The whole CPSC and the PSC basket continues to make new all-time highs. NTPC finally on a non-dividend adjusted basis also is coming towards a high where it made in 2007. So the trends are pretty strong. Any fade off towards 202, 205 would be a buying opportunity. The recent highs for Power Grid are also pretty close. At 263, 265 is a resistance. Closer to 250 is a 250, 55 is a buy zone. The trend remains positive across the board in this power-related segment on the PSU side, as well as we've started seeing momentum on the power side in the private space as well. We saw huge volumes on Tata Power on Friday. We also saw a price uptick on Torrent Power. We've seen a recent even JSW Energy do well. So the whole power sector looks like a new sector which could continue to trade up higher. And there are multiple choices from a small cap like NHPC or a large cap like NTPC Power Grid. So like the whole segment, one could be picking and choosing across the board.
View on power stocks, but we are taking stock of the entire commodities basket on the editor's radar today. So let's just map the kind of movement, Nikunj, that we've seen in individual commodities in the last 1 month. And then you've got the China factor as well. How does this add up?
We're not realizing it, but 13% higher for crude, 6% higher for silver, and copper prices are up 3%. Copper is called as Dr. Copper because it is an indicator of activity. Crude prices going higher, it could be speculative, but ultimately it just tells you that demand somewhere for the fossil fuel is moving higher, and will zinc and aluminum catch up? Bottom line here is that commodity prices are not on a tear, but they're trending up smartly. Commodity prices are trending up smartly, even though you cannot convincingly and decisively say that interest rates globally actually have peaked out. Now you can throw in the China angle, but I want to warn our viewers and say that China had to open up earlier this year when the Chinese economy was unlocking itself after 3 years of strict COVID lockdown, but that has not translated into reality. But in the near term, there is maybe a mood in the market where crude prices, crude derivatives, energy commodity complex and metal commodity complex could be in for a deep swell. There's a difference in a structural recovery and a deep swell. So given the news, the dollar index, China stimulus, things in terms of the setup, how demand in a sense could reorient itself, I will not be surprised if there is a tactical trade in metal especially and some of the industrial denominated commodities.
Okay, there you have it. That's the view coming in on this entire space. Anisha, would be interesting to get in our fundamental guest views as well on this. Sandeep's.
Oh, well, yes, absolutely. Sandeep, what's your take on the metals basket? Would you be a buyer in any of these names and the China angle, etc., that Nikunj was talking about?
There are two parts to it. One, the metals and many other commodities, be it plastics, chemicals, etc., they have got sold off very badly. So many of them are down 40-50% from the tops also. So they will, and a bounce back is imminent. So I think we'll see definitely see a bounce back driven by the fact that the global economy seems to be resilient to interest rate hikes, and this China news flow keeps on coming in. But so I think a small revival in any case, that's welcome, because commodity companies going into deep stress is not good for the financial sector also. So I think some bounce back is good. But I think this China revival story and all, I don't believe in that at all. I think China's economy has such huge structural issues that whatever stimulus they try to give, it will only have a very short-term impact. It's very difficult for any sustainable upswing to happen in the Chinese economy. And to that extent, it's good for countries like India, because then inflationary pressures remain under pressure. So in a nutshell, I'll say there could be small bounce backs in metal stocks and the sector, but no sustainable big upside.
For the second half of the trade, Sandeep, what is the trade here? Do you align with commodity producers? Do you align with commodity consumers? Or you should not focus on producer and consumer versus trade?
We should not, because of the fact that many of the companies suffered a lot because commodity consumers suffer because if commodity prices move up too much too fast and the price adjustments can't happen. And that phase is over. I think we've had a huge downside. Now we are seeing some small recovery. So small recoveries get adjusted. And to that extent, we need to focus on where we see sustainable growth. So I think I would still think that the story for many of the industrial companies, which are consumers, etc., which suffered too much due to the huge spikes, it is much better than pure commodity producers, because the commodity cycle, I don't think, is going to see any huge revival.
Okay. Sandeep, you've been buying into PVR, and I can argue about whether Oppenheimer was a great movie and why Barbie was a hit, but cinema footfalls have started again, and there seems to be a big departure where exactly a year ago we were talking about, okay, no great content and Brahmastra did not do well. Now it's the reverse end. Do you think for next 6 to 8 months, let's say from here till December, from here till next March, there could be a 50-20% move in PVR, and that's the only one left now?
Yeah, it's very much possible, because I think the entire thesis that people will just stay at home, not move out, doesn't work. So, in fact, if there's good content, and as we've seen, the day I went to watch Barbie last weekend, I haven't seen such a rush in PVR ever. Like, there were queues to just get into the cinema hall, and then Rocky and Rani is done well. So I think picking out small periods where movies are doing very well and etc. is not a great way to actually invest in a business, but then that's how the markets operate. Overall, I would still think that it's a good space to be in. People would like to go out if they get an opportunity, and it's a whole experience. If you see many people for a movie like Oppenheimer, the IMAX shows, they are still booked throughout this entire week also. So I think People are looking for, people want to go, but they need a reason to go. So if the reason doesn't come, they don't want to waste their money. So I think now the reasons are coming, and the stocks have got sold out so much. Like PVR, I believe peak was 2300 odd last October. Now it's at 1500, 35% off. And typically 35% off of good businesses from the top become decent buy levels unless and until the business is totally going to collapse.
Okay, so that's the take coming in. As far as PVR Inox is concerned, the business is not going to collapse. There could be a healthy mix of both OTT as well as multiplexes. But Sandeep, the other space which has been seeing a stellar set of earnings has been these all micro lenders and microfinances, etc. Whether it's a case of 5-Star or even the other names like Fino Payments Bank, etc. Is this a space that you track? And if yes, which are the stocks you like?
Actually, as an investment philosophy, I don't go into smaller financials. I try to either be in large NBFCs or large banks. So that's my personal choice because I don't want to take risk in the financial space. I would rather take risk in some other spaces because financials is a segment where the larger players have a definite benefit in terms of cost of funds. And in a tighter liquidity scenario, they will benefit. The smaller ones tend to take more risk during these periods. And we've seen in previous cycles, these smaller financials taking more risk, showing higher growth, which excites analysts. But as the cycle turns, they run into big problems.
With the management of Nazara Tech also coming at 10:30. I'm just going to move and talk about NTPC Kuna. We don't talk about it. NTPC, REC, PFC, that's where the real pot of gold is.
Yeah, and the entire power space, power related space, they've done reasonably well. In fact, even Power Grid to a larger extent has done exceptionally well. ONGC has come back towards that 170 mark. PFC, REC, I think they are going through a more of a dream phase in terms of the returns for these stocks. I remember PFC was just about the 200 mark, 185 at the start of the previous expiry, and right now we are talking of the stock at 250 plus levels. REC Limited is very close towards breaking the 200 levels for itself. NTPC has done remarkably well in a more consistent manner, breaking the 200 mark. I think 208, 210 was the close for NTPC on Friday. So exceptional move coming for most of the PSU and the power names, and and it's surprising because when we look at a 10%, 20% kind of an upside for these stocks, we expect a time-wise correction, but these stocks have not gone through any major time-wise correction. There's been pause for just 3, 4, 5 days at best for these stocks, but then the resultant effect for these stocks post that pause is to break out and deliver another 10 to 15% over a very short period.
Let's look at pharma. And just a sector where the gains I think are very, very varied. That's pharma for you. You may use the word pharma, but within pharma there are companies, there are trends, there are products, there are cycles, and there is whole range of factors which are at play. So let's look at Nifty Pharma. Looking at yesterday's change, now let's look at the YTD change, and then we've got some data as to which in a sense has been the best performing pharma stock, which has been the worst performing pharma stock, which has not really caught up. That's the Nifty Pharma Index for you, up 18%. Now that's not much. That's not much for a sector which got completely blown out in last couple of years. But within the pharma, now map Glenmark, exceptional mover. Aurobindo Pharma, exceptional mover. That's the pharma space for you. You've got, Aurobindo up 90%, Glenmark up 88%, and you've got Lupin and Alchem, which are up, not all that up in terms of the move. I think we need to change this graphing. The scales are completely different. Natco is a 47, then trend obvious torrent cannot be higher than that. So obviously, my apologies. Okay, Sandeep, pharma, what's happening there?
Several things are happening. First, the move starts when the sector becomes underowned. So the sector became very underowned, and to that extent, that contributed to the move as some positives started building up. On the generic side, we are seeing price upticks globally. Domestic market is doing decently, and input cost pressures are coming off. So there's a combination of factors working in pharma, and valuations came down to levels which were at multi-year lows. So I think that's all contributing. Now people have to make their choice. I don't buy stocks like Glenmark or Aurobindo, which have balance sheet and previous corporate governance issues, which are which people tend to ignore in the short run. But we do own Sun Pharma and Lupin, which has done well for us.
And Sandeep, what about the entire auto pack? Of course, it's been in the news flow last week, is expected to be in news this week as well, whether it's an M&M on account of earnings, as well as the entire RBL discussion, or the fact that tomorrow we'll get the auto sales data.
Yeah, so I think in the near term, the results become more important rather than the monthly data, because July was a huge rain month all over India. How that impacts demand in the short run is something which is unpredictable. So results will be important, whether these companies also show the kind of margin improvement many of the two-wheelers, etc., have shown, and the kind of outlook they gave. From M&M perspective, like you rightly said, it will be important to hear from them as to what their logic is for buying into RBL, etc., and what they are looking at. I'm not sure whether they'll give any significant clarification or not, but then it might be a more long-term strategic move. That's something we need to see. But in the near term, I would say more than monthly data, the results will be more important.
Sandeep, let's look at what's happening in the passenger car segment. Okay, SUVs are selling. And when I met you first, you had a sedan, then you bought a SUV. Now, last time when I met you, the size of the SUVs become bigger. And that really seems to be the phenomenon at a all India level. But if one realistically look at the non-SUV market, that is slowing down. We are getting excited about SUVs are selling more, but sedans are selling less because the aggregate picture is only 5-6% growth.
That's true, but Nikunj, what we need to realize is that the value of SUV would be maybe twice that the value of a sedan in many cases, or 40-50% higher. So to that extent, as the value of the cars move up, one, and these companies can make more margins out of it. Secondly, even with a 5 to 6 to 10% kind of volume growth, the top line growth could be above 15% or more, or maybe 15 to 20% also. And that's a reflection of growing prosperity in India, better pricing power. That's what is happening. If you see real estate also, like all these real estate companies are selling more and more premium projects. And so I think it's a reflection of a growing economy, which should keep on playing over the next few years.
What's the outlook when it comes to, a Delta Corp? No doubt it's been nothing short of a roller coaster ride, the kind of market cap erosion due to the GST decision that has been taken. What's your outlook for, investors who've put in their money, completely, abandon the stock now, or wait up because the long-term trajectory looks strong? What's the view?
See, if the government is hell-bent on killing an industry, then it makes no sense for us to hold that stock. That's my logic. So I think with this kind of taxation which has been proposed and the way it's been proposed, how can these businesses sustain? It's impossible. They'll still be there, but then where will the growth come from? If people have to pay upfront 28% tax on for just playing. So I think this taxation regime defies logic, and to that extent makes the stock unviable, I would say.
You got a lot of banks where the tone and the tonality, I think, is very simple. Credit growth of 15 to 18%, I think, seems to be the universal growth for the banking sector. And this is large banks. But the minute you go down, you look at, let's say, a growth what you got from IDFC Bank. Look at the kind of growth what we've got even from RBL. It's a curious case, Sandeep. Why would Mahindra & Mahindra look at investing into RBL? If it is not strategic, then it is non-core. For a company which has really burned the midnight oil to fix their capital allocation, why? क्यों जाकर के RBL में stake लिया?
Yeah, it has to be strategic only. Otherwise, it makes no sense. Why invest? They are not into making portfolio investment. They haven't done it in any other company. So to that extent, it's strategic. What their thinking process is at this stage as public shareholders, we don't know. Maybe they think that there'll be some policy change which they can benefit out of somewhere down the line, and this is the time to take an initiative when their cash flows are strong. So I think clarity will come later. there has to be strategic thinking. As a portfolio investment, it doesn't make any sense.